Good evening, guys. This is a video on how I use supply and demand zones to gauge overall market direction and how to basically keep you on the right side of the trend. So we have our four core patterns here that basically are the foundational principles and patterns behind how I trade. You have a drop-based rally, which is basically just, you get your red candle here. Then you get your basing candle here. Remember, this, it can be a bullish or a bearish candle. It does not matter. It's just, I call it a basing candle because it's simply a pause. You get price drops like this, and then you just sort of trade sideways, and then you get your move out of the level, which is confirmed only when the candle makes a higher high. So a drop-based rally is actually not really confirmed until you get breaks over prior high. So let's call this the prior high. Equals confirms the zone. So you get a drop-based rally here, right? Price sells off, base is here, rallies out. You get the higher high, which confirms the zone, which sets us up for a potential trade in the future whenever price does come back and test this imbalance. We do the same thing. We draw our zone out here. Let me change the color, and ideally, our plan will come down to market makes its way up, and then we would look for an entry down here with a stop loss below the lows here. So our stop loss would go stop below the wick lows. So this is basically our drop-based rally structure right here. Remember, this is a very key part right here, is that the move out of the level needs to make a higher high. So it just needs to break a prior high for the zone to actually be valid. That just means that buyers were able to take over the previous high, which means that the buyers were indeed in control. Then we have one more pattern, which is the rally-based drop. It's just opposite of that. It's your rally, base, makes a green candle, rally base, drop. Same thing here. We get our rally base drop. Let's put below the lows of here in this area. Makes a lower low, confirming the level. So once we do get the lower low and the confirmation of the level, our trade plan comes down to us looking to take a trade on a relief bounce into this zone, back into this level. Right, so price is gonna sell off, and then we want to look for a short entry here and fade it with a stop above the wick highs. And essentially what this pattern is actually telling you, based on the lower highs or lower lows into the zone, is these are our reversal structures, which typically these actually begin new impulsive moves. So if I want to incorporate wave theory, the idea behind being able to identify powerful structures like these reversal patterns is that you actually, let me clear these out, you actually get your zone formed here. And then let's give a little wick here, just change it up. And then you get your zone formed here, right? Right, so let's call this supply. We get So we get the confirmation of the lower low right here, right? So price is continuing to sell off, right? And the idea is that this is actually going to be the start of an impulsive move, which could be your wave one, and then you get your relief bounce up or your ABC move up. We got our ABC up here, and the idea is the key part here is the lower low, right? So wave two, you get your wave two, and the idea is that printing so this becomes a key high. That's why on my charts I'll write key high and sometimes key high. So the idea is you'll get your impulsive wave moving down, and then you'll get your ABC up, possibly forming a wave two. And the assumption is that if we do, or if the bulls, or if the bears are able to print a lower high below this key high, the move to be followed should be a wave three, which should be an explosive move down. Like that. So that's sort of how these, this is the same. So this is a rally-based drop. Same thing for drop-based rally. This is sort of the whole premise behind the ideology behind this type of pattern right here. So anyways, knowing what I just said there, let me clear the chart up and I'll show you guys some examples of oh wow, yes, nice, some examples of this on a naked chart. So just naked chart, I use pivot highs and lows. Here's the indicator right here. I use pivot highs and low. Typically I use wavelengths of 10-10, which will kind of be less noise in the chart. It'll just show me key pivot points in the chart. But if you want more pivots, just use like a wavelength like 5, and then you get more pivots. So anyways, what I want to do while looking at a plain price chart is I want to just zoom out, and I just want to look at the overall trend. I want to look at where we are at relative to price and where the origin of a move was at. So, where are we? So we begun with our March sell-off, and then we get price to reverse down here, right? And then we start getting all these levels. So looking at this chart right away, I just want to like identify some key higher time. Remember, I'm on the daily chart. So I want to identify just some levels of supply and demand on the daily chart, just to mark them out, just so we can see, how price reacted, and just some examples of how some powerful zones can actually dictate price action. So just starting down here, we want to always look left and down. So starting back over here, here are some examples of some pretty quality levels. You get a rally-based rally right here. So remember, at this point, this is a rally-based drop supply, right? So let's just start here. We know that this is supply right here, right? Using the open of this candle, right? We know that this is supply here. Why? Because it is a rally base drop, right? So let me just make some notes just so we are on the same page here. I'm going to put RBD, rally base drop, right? And then over here, we have demand right here. We have a rally base rally, right? You get demand right here. So just sort of look at these events of what happens and how the market is literally moving from sales to buys, sale orders to buy orders. I'll call this a rally-based rally. Keep in mind, big picture, price holding higher highs, higher lows. So let's keep that big picture in mind, right? So over here, you have a quality, fresh, rally-based rally supply zone, quality, fresh, rally-based drop supply zone, right? So we get price is rallying from the March low, right? It rallies, and then it forms this rally-based rally supply zone right here with this. It goes rally, and then you get the doji, the rally, right? So it forms supply here, or it forms demand here, keep in mind we have overhead supply here, right? So look what happens. Market forms this imbalance. It actually rallies up into supply. And look what happens. We get the rejection out of the supply zone, out of here, and market sells off. Look at where it sells off to. It actually sells off perfectly right into this imbalance right here. It sells off into this rally, base, rally, imbalance. And then we get the market to sell off perfectly into this zone. We have 3 days of accumulation, higher highs. You see over here, there's a low. And then we get you see we get, then we start to build a trend. We start building higher lows. So as you can see, the market rallies into supply here. It sells off into demand here. So that's why we want to be able to identify higher time frame levels, because those are going to be your higher probability levels. That'll give you the strongest reactions, and they typically turn price. So we sell off into this daily rally-based rally demand zone right here, and then we get price. Remember, so we filled the cells here, price fades, and then we're able to break the supply, because remember, it's no longer a fresh zone, right? This is no longer a fresh supply zone, right? So price rallies into it. You get a little bit of more distribution here, and then we just bust right through it, making a higher high right here, confirming the trend. So next up, I can clear these out because we already knew what happened down here. Let me clear these up. All right, so next we get price rallies all the way up here. So obviously we want to draw more levels of supply here, right? We get another supply zone here. And I'm going to get a lot of questions about these gaps, okay? We need to think about it right? Because obviously this is the SPY cash session. I'm not showing extended hours. You need to think of a gap down in price as price simply just being if price can gap down here, it's no different than me just drawing like an imaginary, bearish engulfing candle like this. I could easily just say that this is a giant bearish engulfing candle. Same stuff. I could easily say that this is simply a bearish engulfing candle, and then I could draw my same structure here, right? I could draw my zone here. It's up to the highs. And this is, again, guys, price dropped, rallied, based, dropped. So this is another level of supply right here. You've got enough sell orders to actually cause price after printing this bullish candle to actually sell it back down. So the idea is on a fresh test of demand or of supply, price will reject and it'll make its way down to the buy orders. So knowing that this is supply here, this is a rally base drop supply, right? We want to identify the opposing higher time frame demand zone. So this is what I mean when I say trading zone to zone, right? So look what happens here. We are establishing more trend. Here's a low here, and we sold up into demand over here. I could probably go into smaller time frames, but for simplicity reasons, I want to just stick to a daily chart because I don't want to clog your minds with too much noise. Valid supply. Why? Because it took out, you get a drop, base, rally. And why is it valid? Because look at what it did. It took out this high. It took out this high right here. You see, we rallied, we broke this high, came back down, and then we broke another high. So you can see it's making new highs. So really the origin of this move right here was in this basing candle in this area over here. And on this drop base rally. So valid demand. You can see price opens in demand here, and look at what it does again. Same situation that happened back down over here where I showed you guys how it made a higher high. So down over here. So we can call this critical, or I guess I can call this key low. And then same scenario, made a higher high. And then this can also, and then we can call this at this point in time key low. So we put a stop loss below this low because this becomes critical support. And then look what happens down. It opens into demand. This would be DBR, drop base rally demand. We get the open into demand here, and we make another higher high. Huge bear trap, higher high, and then price explodes up, explosion up, and we can break this previous supply because it's no longer fresh, right? Look at this. The first rejection of supply, you get moved down. Second test, you get a move up, and it makes another higher high, but it forms supply in the meantime. So you can see that imbalances are constantly being formed in the market all the time. So we get the move up out of demand, and then it forms another imbalance right here. This right here, this is an imbalance. So what happens again? It forms supply, but look, it formed an imbalance because of this right here. That's why I like, so I can go back, I can, I'll show you guys, another one there, another one here. We got more up here as well. Then we have more supply here, right here. So back down to where we're at in this area over here. You can see again, we get another, right, we get a gap down, price, we get the open lower, rallies. So another valid rally. Base. Drop. Let me delete these just so there's less clutter on the chart. But again, another supply zone right here. Rally base drop. And again, it looks confusing because there's no engulfing, but again, for price to get, look at this monster gap down. Price was able to gap down this much. So it is no different than me drawing a bearish engulfing candle like that. So I take the rally base drop, I take the body of the basing candle here, extend it out to the highs, and then we get our supply. So we get the move out over here as we just discussed, and look at where the market rallies into. Rallies into fresh supply, rally base drop supply. So we get the rally at the supply, we get the rejection, and then it moves down into demand again. So we want to, let me make some notes here. We want to, this is really important. You want to look left to identify levels, trade white space to the right. So in order to identify levels, we want to be looking on the left side of the chart. So all this, we want to be looking at the left side over here to be identifying where we can see potential turning points in the market. So let me move my notes up. We're right here. But again, guys, same thing. We get the rally into supply here and the rejection. So let's say in retrospect, let's say that we did take a swing position down here, right? So we would enter in this demand zone, entry and demand, stop loss below wick low. So we'd put a buy order to enter here, and our stop loss would be at 271. We'll call it 271. So here would be our entry right here, and I would actually target the opposing fresh supply zone. So I wouldn't target this zone, right? Because this zone is obviously tainted. This zone has been tested here, right? So I would target the opposing fresh supply zone. So this zone right here. We get a rally up into supply here. So what happens? We fade below, and now we would need to identify demand, right? So what do? We look left and down, right? We look for where the move started. So let me delete this arrow. So this leg right here, it didn't really begin until this demand zone right here, right? That is still a new balance, even though it was a secondary reaction out of this zone, it's still a valid balance because it still is, we have to follow rules. It still is a drop. It still is a valid zone because it is still a drop. Whoops, it is a drop, base, rally, right? So same thing. I would take the open here, extend it out. And the idea is we would want to enter on the retest of demand, right? So we get price rallies out of here. It rejects, but it doesn't quite hit the level here, right? It was a fake out. You see, so we would obviously want to be patient again. Price rallies up, makes a lower high here. And again, I typically say that these imbalances act as magnets to price. And look what happened. We eventually got the sell down into demand here. And again, same thing. Now our key low would be placed above this low. So we would enter at whatever, at the open of this candle. So we'd enter at 277 with a stop loss below this low right here, below 272. And nonetheless, we get the sell off into demand here. Market pops up, and then we get our huge move up out of here. So as you can see, the market just continues to just move from buys to sales, buy orders to sellers. And I like to point these levels out because they are, they work, and just to help you identify current structures and what's going on with the market. So for example, here's another drop-based drop right here. It's fresh. It's quality because it's near the extreme highs. So same thing, I would extend my levels out like this. And again, we get to move right into supply here, and then we get this nasty dump, nasty sell-off. So that's why overall I like to identify higher time frame daily levels, because when you look at daily levels, they sort of dictate price action more, because if you can have a daily imbalance form on a chart, odds are that the level is going to be more quality. So here's a naked chart of Bank of America. Let's just do big picture. You get higher highs, higher lows. You see we're in a clear channel here. Just to see that we are in fact inside an ascending channel. So again, guys, we want to look left. I can start by just identifying some levels, just looking from left to right. But you get a little drop-based rally demand here, right? So you can either go from the body or you can go from the highs. It's pretty subjective, but there are numerous ways to draw them. It's all about your risk tolerance. But again, here's the fact that it is a valid drop-based rally, because the rules I talked about earlier, where the level needs to make a higher high, it did it. So we call this drop-based rally demand. We can call this the previous high. Previous high taken out. Previous high was taken out over here, which confirms the level. So we know that this demand is valid. So we would want to patiently wait for the retracement into demand. And we get the retracement into demand right here, into the valid drop base rally demand. And we get the price to take off. And if we were playing this, again, we want to look left, and we would want to identify supply for a potential target. So same thing here. You get a rally base drop right here. Rally base drop. So again, same thing. We can go by the bodies or by the wick lows. When you have a little doji like this, like like a little island, I'll go down to the wicks, because what is this, like a 0.5% risk? I'll go down to the wicks and I'll just extend it up to the highs. Right, so we get demand down here, price moves up, and it moves up back into supply. And then you get a little ABC correction. You get your you get 3 waves, 3-wave corrective move. But look at where the corrective move takes it to. That's why wave theory is pretty powerful when used in conjunction with this type of analysis, is because when you know how to count waves, you can see typically where you can expect price to end up to, because typically these imbalances, they truly act as magnets of price. So again, same situation, drop, base, rally, right? And it takes out previous highs. The level is confirmed. See, it took out this high right here. So again, I'll draw my zone. That, and you can see price fades down. And then let's say that we were patiently waiting to take this long trade at demand here. Our stop loss would simply be placed at the previous key low. Right, so the entry would be here, and then we get price to take off, and we get price just viciously takes off. And how can we identify the next potential spot to take profit? Well, I would look left up over here. This is no longer fresh, right? So odds are price is gonna maybe chop and churn through it, but it's gonna break through it if it's no longer fresh. So you can see you get reactions here. So you could ideally target this supply, but odds are it'll break through, because look, you get our 1 test, 2 test. On the 3rd test, you still get some rejection, but it still ends up pulling back and it rallies back up. And then you finally get the breakthrough. So that's why I typically like to only focus on fresh zones. So, same thing here. We would look for the next supply zone, rally, base drop, take it here. Same thing over here, same type of supply, rally. Whoops, it's array. That's not what I wanted. Rally, base, drop, and then price rallies from demand, explodes up into fresh supply here, and then you get a sell-off. So now this just looks like an ABC correction or a 3-wave correction. So we got our first wave down, our A up. It's possible that we're working on an ABC up for B, ABC, call it B, right? So that'll be our second wave up. And then we should get one more push down. So I did post this setup, but this is a nice spot here for a potential long for demand, because the idea is that we get the pullback into demand here, and then we would make another high. See what the ES, let's see. Why did ES bounce? Okay, so again, here's another fresh level of demand on the ES, right? We get a rally base rally demand zone, rally base rally demand zone right here. Same thing, I would take my ray at the open, and then I extend it at the lows somewhere on here, and then I take my handy dandy box, extend it out, and look at where he bounced. Let me delete this channel. I just saw this right now. Look at where he bounced. Precisely right into demand right here. And, you know, I can't make this structure up. You know, I teach this structure. I have many examples of it in, you know, Word documents and whatnot. But here is a strong imbalance. Why is it strong? Look at the candles leaving the area, guys. I mean, you get this massive rally. You get a pause here, and then another rally. So for price to rally, pausing or accumulating buy orders. Look at this wick right here. You see how it didn't quite hit the zone, but it still rallied? That tells me that you have a surplus of demand here for price to basically pull back, barely hit the level, and print this huge, you know, bearish rejection wick and still rally. So nonetheless, today we actually pull back precisely into the level, and we take off. So let's see what we got on higher time frames. Same thing here, guys. Here's the structure right here. Again, that's why we sold off, because this imbalance right here. So now we get the market to form new imbalances. So we get a new level of supply here. Rally base drop, which I will probably like to take a short from. Rally base drop supply zone up here. And let's see what's on the smaller time frame. You see we have some sort of supply in this zone around here for price to rally, base, and drop. So this would be a area where we likely pause at. So I'll just take this, draw the wicks. Oh, there it is. So there's some supply here. So that's sort of what I do. You know, in terms of trading zone to zone. And you know, what's important is being able to zoom out, look at the big picture, see what's going on. But as you can see, I mean, you know, when you have a powerful structure, you know, for example, what just happened in the ES futures right here, you know, this is a very textbook rally-based rally demand zone. So before I shut this off, factors that influence power behind a bounce. How? The less time, the better. Aggressiveness of candles leaving the zone. So this is a prime example. It would be this imbalance right there. And, you know, I can go into 45-minute. You know, I could show you why we popped. I mean, same thing here, guys. Look. You get a rally, base, rally, right? So now we get another imbalance right here. That's an imbalance. For every buyer, there's a seller. For every seller, there's a buyer. So for price to print this bearish candle, they had to have been bidding it up for it to be able to rally out like this. So again, I would draw my level like this. You get price gets extended from the balance. You get the sell-off. It actually hits it almost at a penny. And it rallies again. So I hope this helps out a lot. Again, if you guys have any questions, please don't hesitate to reach out to me. Reach out to me through email. It is very hard for me to get back to everybody through Twitter DMs, just because I'm sure you can imagine that my DMs are always getting spam messages and stuff. So if you reach out to me via email, if you have any questions about charts, I prefer if you avoided asking me for individual stock questions, because I do track, you know, big players and high beta names, and I'm a firm believer in less is more, and there's no need to venture outside of your watch list. So if you guys have any questions, or if you are working on charts and you want me to give you my input, please send me an email. I'll get back to you as soon as I can. I hope this helps, and I will see you guys in the morning.